More than $10 billion. Gone. Not stolen in a hack, not erased in a single market crash. For GoPro, the empire Nick Woodman built into a global symbol of adventure, the wealth simply evaporated. After peaking at an $11 billion valuation in 2014, the company bled value year after year until its stock was worth little more than $1, and its auditors, PwC, were forced to declare a substantial doubt about its very survival. The money that vanished wasn't abstract. It was the retirement savings of true believers, the paper wealth of employees, the promise of a category-defining brand that somehow failed to build an unbreakable business. Where did all that value go? To find the missing billions, you have to rewind past the collapse, past the IPO, to an idea for a simple $30 camera that first took shape in 2002. That $30 camera was born from one man's frustration and a very specific kind of problem. In 2002, during a surf trip in Indonesia, Nick Woodman wanted a way to photograph his friends riding waves. Not from the shore, from the water. The professional equipment was bulky, expensive, and impossible for a solo athlete to use. The problem was brutally simple. How do you document your own adventure from your own point of view without needing a film crew? His solution was bootstrapped into existence. Back in California, Woodman sold bead and shell necklaces from his Volkswagen van to fund the idea. It was supplemented by a loan from his parents. This wasn't venture capital. It was pure, relentless hustle. The result was the first GoPro, a reusable 35mm film camera, sealed in a waterproof plastic housing, strapped to your wrist. For $30, it solved one problem for one community. It let surfers, skaters, and divers capture their world. No audience needed. Just raw, first-person footage that was entirely new. But that singular focus would become a double-edged sword. The user-generated footage was so compelling, so visceral, that it began to change perception. Wall Street started looking at GoPro and saw something else entirely. Not a niche camera maker. They saw the next great media company, a platform, an ecosystem. That misperception would fuel a meteoric rise and plant the first seeds of an eventual crisis. June 26, 2014. GoPro goes public at $24 a share. The market erupts. By the close, the company is valued at over $11 billion, a number that turned heads across Wall Street. A surf cam maker from a Volkswagen van, worth more than household names in consumer electronics. Nick Woodman, once hawking shell necklaces to fund a prototype, is suddenly one of the highest-paid CEOs in America. GoPro didn't just own a product category. It owned a cultural moment. User-generated footage was everywhere. Skydivers, surfers, snowboarders, base jumpers, all captured in that signature wide angle. Wall Street didn't see a camera company. It saw the next great media platform, an ecosystem. The numbers screamed momentum, exponential, inevitable. But beneath the stock charts and magazine covers, the business model carried a critical flaw. The entire $11 billion valuation rested on one assumption, that consumers would keep buying a dedicated, standalone camera, even as the most disruptive competitor was already sitting in their pocket. GoPro sold boxes, one product line, one revenue stream. That structural fragility was buried beneath the force of the brand and the cultural power of its footage. The company was celebrated for the stories its cameras told. No one stopped to ask what happened when the cameras stopped selling, because a far larger technological convergence was already underway. The most threatening competitor wasn't another action camera company. It was a device that hundreds of millions of people already carried every single day. The question that would dismantle GoPro's dominance was being answered in the design labs just down the road. What happens when the best camera is simply the one you already own? The smartphone threat wasn't theoretical anymore. It became market reality the same year GoPro's first major diversification play imploded. The Karma drone launched in 2016. Almost immediately, reports surfaced units losing power mid-flight, falling from the sky. A full recall followed within weeks. The product was dead by 2018. A costly strategic failure that left GoPro with nothing to offset the erosion of its core business. The competitive moat around the hero camera was evaporating. Smartphone cameras achieved remarkable quality. Cheaper action cam clones flooded the market. GoPro's pricing power vanished. The question was no longer certeris tinctoris, no consumers would buy a dedicated camera. But moments to certesi, demand cratered. The company that once defined a category was fighting for relevance within it. This dual crisis, a failed expansion and a collapsing core market, forced a brutal operational retreat. Multiple rounds of layoffs followed. The narrative flipped from ambitious growth to desperate survival. GoPro was now burning cash just to stay afloat. But even this wasn't the deepest wound. The product stumbles and market shifts were devastating. Yet the true existential threat was quietly metastasizing on the balance sheet, where an unforeseen commodity price shock of up to 115% for a single critical input was about to trigger a formal public warning that no amount of layoffs or recalls could prevent, whether the company could survive at all. The warning was no longer a market whisper. It was now printed, audited, and filed with the SEC. In its 2025 financial statements, GoPro's auditor, PricewaterhouseCoopers, attached a formal note stating there was substantial doubt about the company's ability to continue operating. The diagnosis was written in the numbers: revenue of $651.5 million, a net loss of $93.5 million, and operational cash flow bleeding red. The market's former darling was officially on life support. But the real peril wasn't the loss itself. It was a tripwire woven into its own debt. A covenant analysis showed management did not expect to meet the minimum financial benchmarks demanded by its lenders. That projected breach was a financial trapdoor. Under cross-default provisions, it could trigger a demand for the entire $88.67 million debt stack to be paid at once. The operational crisis had just become a solvency crisis. The response was a two-part surrender. First, a restructuring plan to cut the global workforce by 23%, a move expected to cost up to $15 million in severance alone. Second, a public search for a strategic buyer, a sale or a merger. Yet both lifelines depended entirely on others. The restructuring needed lender approval. The sale needed a willing bidder. Control was slipping away. The auditor's warning wasn't a prediction. It was a photograph of the present. The next chapter examines the single, fragile structure, buried in the cost of a tiny memory chip, that turned a simple revenue decline into an existential threat. The final, fatal blow did not come from a failed product or a new competitor. It came from a single line item on a bill of materials. A sudden, unanticipated spike in memory costs, up to 115%, slammed into GoPro's already bleeding operating model. With razor-thin margins and only $49.7 million in cash, the company had no financial shock absorbers. What should have been a manageable supply chain headache became an existential threat almost overnight. This commodity shock collided with the company's dangerously fragile capital structure. The restrictive covenants on its debt were not designed to withstand such a sudden increase in costs. The spike converted an operational problem into a full-blown liquidity trap, where a breach wasn't just likely, it was a matter of physics. The strategic error was now laid bare. A complete dependency on new hardware cycles to outrun the relentless commoditization of its core technology. Zero margin of safety. When a single variable broke against them, the entire system failed. It was a high-performance engine with no brakes and no airbags, running on a road full of unpredictable hazards. The story of GoPro is a forensic map of this fragility. A brand once valued at over $11 billion, now dismantled by high operating leverage, unchecked commodity exposure, and a balance sheet that left no room for error. So the question is not just whether GoPro will survive, it's whether other beloved hardware brands are running the same gauntlet, with the same hidden fragility, each one waiting for the same single shock to bring it all down.